Hello, I'm Mi-jun from Mizushiran University. Today is May 14th and this is Mizushik News. Today, let's check the latest updates on the United States stock market without any changes. This is Mi-jun with the news. I will now share with you the latest news about the partnership between YouTube's PewDiePie and Choice Stocks content collaboration. And after watching the broadcast yesterday, so many of you welcomed this news and left a lot of positive comments, so I personally felt really grateful and happy. A lot of people left messages for me, and among them, there was a comment from a viewer named Migukwa Hamkehai Jusil Nakmanju, who has been with us for quite a long time. I would like to read that comment to you. Congrats on your collab with Choi Soo-sang. You did a great job. Actually, Choi Soo-sang is a celebrity, but it wasn't that easy to approach him. But from now on, it will be much easier to get closer. Mr. Kim Min-jung, I'm so glad to see you often. I spent most of my time broadcasting and focusing on my schedule. I like it. Manja is love. Now, Manju, thank you for your reply. This week, we shared videos of Aoje and Imi's two performances with many people. Next week, the broadcast will be on Tuesday and Thursday, Korean time. At 5 post-meridium, you can watch the video of the catechism explanation, which was directly produced by Kim In-jung through the Mi-ju-won channel. Now, the Mi-ju-won channel has been upgraded to the next level and has become more professional. From now on, not just market news, but also in-depth analysis videos about Mi-ju-won stocks will be offered, and I'll be joining you too. We are planning to add more useful content that will help you discover new growth stocks and various United States stocks that you may have been interested in at least once. Going forward, I will do my best to meet your interest and support for Choice Star and Mi-ju-won channel. Let's dive into the United States stock market news for May 14th. Today as well, I'll summarize the key points of the United States stock market for you. Let's first take a look at the S&P 500 index. Yesterday, the overall market was mixed. So the declining sectors were about half, and the rising sectors also accounted for about half. And in the current situation where the market is fluctuating, the tech stocks we pay attention to, especially semiconductor stocks, are clearly standing out in green. Nvidia and Broadcom, both artificial intelligence-related stocks, led the market with gains of 5.63% and around 5% respectively, demonstrating the strength of the artificial intelligence sector. On the other hand, many value stocks fell behind, especially healthcare didn't perform well. Let me briefly explain why healthcare has lagged like this. Before this, there was an article that was delivered to members under the title of "A Huge Warning Sign That No One is Paying Attention to." This appears to be a price control measure, and it's probable that other high-income countries will implement similar policies. This news was actually reported 2 days ago, and now it has actually become a reality. President Hyun Jong-myung is an American. Now let me show you exactly what this means. America's debt is now 278% higher than the global average. Therefore, President Trump announced that he would lower these high drug prices by up to 80%. That was the announcement he made. So why is this such a big issue? That's what I was thinking. According to the United States Consumer Price Index Inflation Index for March 2025, the rate of increase in drug prices is about 1.35%. That's an enormous figure. So, if President Trump's promise to lower drug prices by up to 80% comes true, the annual increase in the Consumer Price Index inflation rate could drop by about 1 percentage point. That's the theoretical calculation. Well, even if not all drug prices drop by 80%, just a portion of them, especially those that have been rising rapidly in the Consumer Price Index, could see a significant decrease. So it is possible for prices to drop significantly in the future. If that happens, it could be a big help in stabilizing inflation in the United States. That's how you can interpret it. Now, whenever there's this kind of news, people get scared easily. If prices drop, it could have a huge impact on sales. The overall market uptrend is being restrained solely by the healthcare sector, as demonstrated in the provided information. If you look at the sector performance of the actual S&P 500, you'll see that technology has been leading the market lately. It went up by 2.16%, but on the other hand, healthcare is showing a decline of more than 3%. I'll also organize the market indicators for you to see them clearly. Yesterday, it seems that the number of items that actually fell increased a bit more. Based on the S&P 500, the percentage of stocks trading above their 51-day moving average dropped from 70% to 68% yesterday. And the percentage of stocks with a positive trend also dropped from 50% to 49.9%. Therefore, the market's momentum has weakened a bit and the market's breadth has slightly narrowed. Currently, funds are concentrated in tech stocks. The Fear and Greed Index shows this too. It's gone up to 69. I told you recently that it was getting close. If the market keeps rising like this, it could suddenly drop sharply at a critical point, so you have to be a little cautious. Are you talking about the max code provided by Choice Stock? It went up to 71 recently. In the past, when the Choice Stock Index reached a higher level, it often moved into the greed phase. If it rises slightly more, it could enter this phase again, so caution is needed. In our investment strategy, we are slowly decreasing our investment ratio and raising our cash reserves. I believe it's important to individually plan and handle your investments this way. The volatility index, shown at the end, has dropped to around 1820, which is lower than the 2021 average of 19.76, indicating it's at a relatively low level. Now, today I'm showing you the volatility index at the very end for this reason. The supply of stocks is currently rapidly decreasing, according to historical statistics. After that, I'll read you an article related to how the United States stock market performed. The United States stock market's sharp volatility has subsided after Federal Reserve Chairman Jerome Powell's relatively dovish remarks at the Federal Open Market Committee. The initial anxiety that had arisen due to concerns about investor unease and rising bond yields has been replaced by strong upward momentum. It is starting again with such a positive message. Regarding the volatility index VIX, which is widely used as an indicator of investor anxiety, it dropped to 18.2 on Tuesday, but it also fell additionally to 18.49 on Monday. The long-term average is 19.5, so the current VIX level is even lower than the long-term average. You can see it like this. Data track researcher Gongdong Seolipja Nicholas Collas is coming out. It's definitely returning to its original state. That's how it looks right now. It's the first time in a while that we're seeing a normal investment environment, and we're evaluating it positively like this. Many people are expecting it. As you may remember, after the announcement of the measures by President Trump last month, the volatility in the market has somewhat subsided and the atmosphere has stabilized. It went up to nearly 60. The data trend indicated a strong market response, necessitating an immediate policy reaction based on the analysis at that time. So was there actually a policy response? Right. After that, President Trump temporarily suspended trade negotiations with countries other than China. Kang Byung-dong-sung and Sung Bin-soo are directly impacted as they work in manufacturing. And in addition, there was news that the United States and China agreed to suspend the additional tariffs for 90 days at this summit, so the VIX has continued to decline for now. Now, as a result of this agreement, Wall Street analysts are holding on to their expectations for an economic recovery. Investors believe that the agreement reached at the White House on April 2nd was less than expected, but this is strengthening the overall positive outlook. Now here, the direct cause of the drop in VIX is that after VIX exceeded 40, it fell below 20, recording its lowest level in quite some time. The investor relations team from the company called Bespoke Investment Group is coming out. At the beginning of April, VIX briefly exceeded 60 in the historical volatility market. And then it recovered below 20, meaning that in just about 20 trading days it dropped from 60 to below 20. This was the fastest volatility contraction in VIX history. That's how we're analyzing it. So in the process, Bespoke has organized the cases where the VIX rose above 40 and then quickly dropped below 20. And then Bespoke looked at the S&P 500's performance during those periods, as well as its overall performance after 1 week, 1 month, 3 months, 6 months, and 1 year to see how it generally performed. Now take a look here. After a week, there was only one time when it was in the minus, and for the rest of the periods, they were all plus. So even though things looked so bleak like this, in the end, the S&P 500 has historically shown a tendency to rebound. That's a fact we can check for ourselves. Major Wall Street institutions are showing signs of shifting their stance. Wells Fargo Investment Institute predicts the S&P 500 will reach 6,000 points by the end of the year, and the United States will avoid a recession in 2025, making optimistic forecasts. Goldman Sachs is also joining in. Here, I have adjusted the S&P 500 target for 2025 again, and I'm delivering this news to you. On the May 12th research note, the 2025 growth outlook was adjusted from the previous 0.5% increase to a 1% increase. They're presenting an optimistic outlook, stating that the United States gross domestic product will grow even if it's only by 1%. The probability of an economic recession within the next 12 months has now dropped to 35% according to the announcement. If you ask if I'm as optimistic as Mike Min, what would I say? Since last March, Wall Street's monthly disclosure of public offerings has provided investors with accurate sales and trade timing information. This fact is being presented again to many. Whenever the fear index rises sharply, we just need to wait before expecting the market to rebound. This is how we reach this conclusion. In reality, let's take a closer look at how the VIX is sending us signals. As you can see here, the warning signal that Wall Street's fear index is showing has been the main topic of this story. At that time, the VIX index had dropped sharply. During this adjustment period, the VIX hasn't been able to break above 30, and the fact that it's staying below 30 like this is considered positive. This is why I'm presenting this opinion to you. If you ask when this was, as you can see here, it was March 18th. On March 18th, the S&P 500 down, which had already dropped 862% from its previous peak, was showing a decline close to 10% in just one day. At that time, we thought, wow, it's dropped so much even now. That's what we were thinking. So we wondered if it would fall even further from here. And it was a moment when we were gripped by that kind of fear. But at that time, VIX hadn't even gone up to 30 yet. So back then, there was still some lingering doubt about aggressively buying stocks. In this way, VIX was sending us a message. Could the United States stock market, which has plummeted over 10% recently, bounce back? That's the question. Now, if you're wondering when this was, it was April 6th. On that day, VIX soared dramatically, reaching 45. It had climbed up until the 3rd, and as I mentioned here, since 1990, VIX has only gone above 45 twice. The first time was during the 2008 global financial crisis, and the second during the 2020 pandemic. So as investors, we have to judge whether the current market volatility is due to the pandemic or just a temporary event compared to past situations. And personally, I think the fear during the pandemic was incomparable to the fear during the Trump impeachment. That's my opinion. And so, as many of you know, during the Trump tariff fears, the market dropped by as much as 17.6%. After that, the market's upward momentum was completely halted, and then the S&P 500 showed a rapid decline of 16.28%. Just one more thing to show you. On April 28th, I shared an article discussing 5 reasons the United States stock market could experience an immediate decline. This was an article I wrote myself, and at that time, among the reasons, I mentioned that the number of new unemployment claims had dropped. If you look here, the number of new claims kept falling from 60 to 13, and it continued to decrease, dropping by more than 50%. This part is extremely positive. The reason is that when the VIX drops more than 50%, it tends to fall below 30 again afterward. We must acknowledge this as a clear indication of a turnaround, as supported by historical data. So right now, since the VIX has risen this much and exceeded 50%, we need to understand that the market has already hit bottom. The date I wrote this article was April 28th. And since April 28th until now, the United States stock market has made an additional 6.47% upward move. Yesterday, the S&P 500 rose an additional 0.72%, but there is one more interesting thing. The reason is, with yesterday's additional rise, the S&P 500 has now turned its year-to-date returns positive. That means the returns from January 1st up to now have turned positive. So up until now, we've seen a very volatile market, but in the end, it's recovered back to where it was on January 1st. That's how you can interpret it. In fact, the year-to-date returns of United States stocks, particularly the S&P 500, have largely turned positive. Up until now, except for the 7 stocks that have shown a minus year-to-date return, most of the other stocks are gradually making up for their losses. Especially, Palantir has surged nearly 70% year-to-date from January 1st to now, and Uber has also risen more than 52%. Nextera has risen by 48.07%, and Strategy has increased by 45% from January 1st until now, as shown in the image. Now let's take a quick look at the performance of the stocks I mentioned earlier. Yesterday, among the United States stocks, Enphase Energy performed the best, With a 9.52% increase, it once again proved why it's considered a key stock. 8.14% yesterday, marking the second such rise. When a stock jumps over 8% in a single day, there's usually a reason behind it. It hit a new high. Usually, when a stock price surpasses its previous high, it can be interpreted as a very positive momentum. So, even if there isn't a specific reason, the recent upward trend in Palantir's stock price has once again sparked strong momentum. It exceeded its prior record, which explains the situation. 6.95% for the third time, followed by Nextracker's strong performance with a 6.83% increase. What about Nextracker? There is an important event today. On Tuesday, May 14th, Nextracker, ticker name NXT, is scheduled to announce its earnings results. If they announce good results and show such a positive outlook, let's keep an eye on how the stock reacts. Next, Vista Plug 610, B2 Plug 610, and Nvidia rose by 5.63%, leading the market. 4.93%, 4.89%, 4.13% Uber up, 4.11% AMD up, 4.01% Taiwan Semiconductor Manufacturing Company up, 3.75% Meta up 2.60%, Talent Energy up 1.88%, and Amazon up 1.31%. And then two stocks fell. Bitcoin dropped by 0.68%. Lastly, Trade Desk has been rising a lot recently. After a 7-day sharp rise, it is now technically adjusting by 1.59%. So, from now on, I will organize several correctional news items that have recently led the United States stock market to rise. The most notable news was related to the rise in commodity prices. In the morning, the Consumer Price Index was announced, and the Consumer Price Index inflation figure came in lower than expected. Please double-check the details related to this. According to the United States Department of Labor's announcement on Wednesday, the Consumer Price Index for April showed the smallest year-over-year increase in 4 years, as consumer prices rose only slightly. This part is crucial. However, the Federal Reserve remains uncertain about the inflation outlook due to background factors. We must focus on this section. The Consumer Price Index for April rose by 0.2% compared to the 0.3% increase, so the actual figure was below expectations. So there is no inflation compared to what people thought. And although there was a slight rebound from the 0.1% drop in March, the trend of prices stabilizing is still being maintained. Now take a look here. The housing cost, which includes the rent index, is holding back the overall rise in the Consumer Price Index, so that's why it's coming out like this. Despite the reported 0.2% increase if housing costs are excluded, the actual inflation rate is only about 0.1%, indicating no significant inflation. I will explain housing costs in more detail later. The Consumer Price Index in April increased by 2.3% compared to last year, lower than March's 2.4% rise. The numbers were primarily influenced by reduced tariffs on Chinese imports, including a 20% cut on butane and propane and a 25% reduction on automobiles. These tariff cuts had a partial effect. This part is also very important. The effect of the tariffs was not completely absent, but it was only partially reflected, and last month the figure dropped from 2.4 to 2.3. Therefore, it can be seen as positive news. Food and energy prices are excluded from the core Consumer Price Index, but it still rose by 0.2% in April. The main factor for the housing cost increase was confirmed, so the gradual slowdown in the rate of increase to 0.2% is again an important point to note. So, what is the annual increase rate of the core Consumer Price Index in general? For April, it maintained the same level as March at 2.8%. This kind of stability is possible. Now, I will wrap up with a summary of the key points. Is this the announcement of the Consumer Price Index? Consumer Price Index? They are using it as a good sign for the United States stock market. That's why the initial reaction from the United States stock market was positive. In April, prices rose 0.2% lower than the expected 0.3%, easing inflation concerns and boosting investor sentiment. We should easily understand this part. Now, the important part comes. What's especially noteworthy is that the housing cost, including rent and mortgage, held back the overall increase in the Consumer Price Index. The reason is, if you look at it in the short term, inflation was stagnant before, and the reason for that is because housing costs, price changes, have been steadily and gradually increasing. So, when housing costs behave like this and rise slowly, the Consumer Price Index can remain high for a long time. This is a negative interpretation, and that's why if housing costs stay high, it's a concern. Core prices may continue to face upward pressure, excluding food and energy. As many of you know, people are interested in the rise of core prices because it tends to persist for a long time. The delay in interest rate cuts is crucial, and this is how things are structured. But if you look at it a little longer, whether you look at it in the midterm or the long term, the reason why the consumer price index isn't dropping much due to housing costs can also be interpreted as a positive sign. The reason is that it's one of the items under housing costs in the consumer price index. Imputed rent accounts for a significant portion. Now, this imputed rent is actually closely linked to the rent that consumers actually pay. So when the rent goes up, the imputed rent also rises. That's how you should look at it. So, if the interest rates in the United States, which are closely related, go down, it's clear that the interest rates in the real estate market will also drop. If that happens, the mortgage rates for banks will inevitably go down as well. So, if the Federal Reserve lowers the benchmark interest rate in the near future, it's obvious that bond market rates will also fall. As a result, banks' mortgage rates will inevitably decrease as well. The likelihood of housing costs, which have been preventing a further consumer price index increase, going down is low. If that happens and the overall consumer price index figure drops, then concerns about inflation could subside. This is my personal opinion. Recently, many large United States companies have reported earnings that exceeded expectations despite concerning consumer price index data. Especially in the Middle East, there were several major positive factors, but the main one was the news from India. So, I'll organize the major positive news coming from India and Saudi Arabia so that you can understand them easily. 18,000 of their newest artificial intelligence chips to Saudi Arabia's top artificial intelligence firm, King Abdullah University of Science and Technology. The latest Blackwell chip to be supplied later is expected to be used at the data center currently under construction in Saudi Arabia. The initial batch will be the officially announced GB300 Blackwell chip, and the project is proceeding with this in mind. Wow, that's an incredible scale. Selling 18,000 units at once is truly a huge deal. And one more important part is, as you can see here, it's not the Blackwell chip GB200, but the GB300. So this will be sold as the latest model. The price will be extremely high. According to the Chief Executive Officer of Humain, Tarek Amin, the company plans to build a total of 19 gigawatt data centers by 2030. In that case, hundreds of thousands of Nvidia GPUs will need to be installed, a massive undertaking. And it's still very uncertain whether such a plan can actually be realized. If that's the case, the main industry that comes to mind here, along with me, is the semiconductor foundry business, specifically Samsung's foundry investment field. This is the Korean government's foundry field, and the government's foundry investment is enormous because the foundry industry is capital intensive. By 2030, the likelihood of manufacturing tens of thousands of Nvidia GPUs is high, making it something to anticipate. And also, the Saudi Arabian government is working to localize and store personal and financial information within the country. International companies risk losing contracts if they don't operate facilities in this country. Why is this important? The same applies to Google, Amazon's Amazon Web Services, and Microsoft's Azure. The rule is that data centers must be built within Saudi Arabia, and if they don't do that, they can't operate. Therefore, there is a huge demand for building large-scale data centers in Saudi Arabia, requiring a massive number of GPUs. That's how we can understand this situation. Now, I'll summarize what Min said in one sentence. The announcement of Saudi Arabia's partnership and the 500 megawatt data center supply contract is seen as a new momentum for rapid growth, as it is expected to be used immediately for actual operations. What does this mean? Until now, Saudi Arabia and Arabia couldn't buy many GPUs at once, but now they're buying as many as 18,000 units in a single order. So, the point is that a model that can directly boost sales has been developed, and this is what it looks like. The main reason is that the Public Investment Fund, which operates Saudi Arabia's sovereign wealth fund, is supporting this. They have announced an ambitious plan to build a total of 19 data centers and clusters by 2030. That's why it's attracting attention in the industry. Through this project, they can secure a stable sales pipeline in the short term. Especially, instead of the previously strengthened graphics processing unit, it's not the GB200, but the GB300, their latest model. Therefore, the price competitiveness is very high, and the potential for rapid sales growth is also high. That's the key point. We can also look forward to the possibility of adjusting the guidance by segment. From a mid to long-term perspective, it's very positive. The accelerating expansion into the Chinese market is a very favorable sign. The Saudi government is reinforcing its demand for domestic storage of personal and financial data. Therefore, global cloud artificial intelligence companies cannot do business unless they operate a local data center. Among them, Nvidia is taking the lead in this trend. Therefore, it is evaluated that they have secured a clear competitive advantage. That is the general assessment. And then this time, Business Public Investment Fund, which is the Saudi government fund, is getting involved. That means, in the future, a lot of different projects could be created additionally. We can also look forward to this aspect. So in the end, this partnership means that NVIDIA can further solidify its dominant position in the global artificial intelligence infrastructure market. Not only is it showing short-term growth, but it is also a very positive sign that it can be evaluated as a long-term value investment. This is how I see it. So both things can happen at the same time. First of all, expectations for earnings can rise, but that's not because sales from Saudi Arabia have already been reflected. Therefore, the outlook for sales in the second half will go up, and the outlook for earnings will also rise. Secondly, not only will the earnings outlook improve, but the valuation, which has been quite low, also has the potential to increase. Stock prices are ultimately a multiple of actual earnings, so if both earnings and multiples rise at the same time, it's hard to rule out the possibility that NVIDIA's stock price will surge further in the future. I'm personally looking forward to it. Well, but NVIDIA's rally that just happened isn't the end. There's also another big piece of good news, and that's what this article is about. Let me explain this part as well. The United Arab Emirates government is reportedly reviewing a plan to introduce NVIDIA's H100 artificial intelligence chips for the largest 50,000 units of artificial intelligence computing in the Middle East, with a total of 100 to 150,000 units annually. That's what this article is about. So if they continue to secure 500,000 units every year like this, among them, 20% will be supplied to G42, an artificial intelligence company in Abu Dhabi, and the rest will go to American companies, including those that are already building data centers in Abu Dhabi. They are expected to be sold here. NVIDIA is expected to sell an additional 500,000 GPUs annually in the Middle East, which is a significant figure. And this is about 4 times the size of the South Korean government's annual purchase. The United States is trying to prevent the export of certain chips to China, not because they are being exported through the Arab Emirates, but due to concerns that these chips could potentially be leaked to China. Now, this information has not been officially announced yet. This news came from a source familiar with the situation. That's how you should see it. Well, but I am. This time, the news didn't mention rumors, but said that President Trump is very likely to officially announce the release of 50,000, 100,000, or even 150,000 related Nvidia graphics cards in the near future. That's what we're expecting. Well, there's a reason for that. The Trump administration has recently been reinforcing economic and security ties with Gulf countries. If you look at it this way, you can see that they are trying to form a bloc. That's how you can see it. Also, President Trump is strengthening America's image as a deal maker right now. So, if you look at President Trump's recent actions, it seems like he is trying to go to Saudi Arabia next after this visit. There's a high possibility that he will make a big announcement there. He will likely try to sell the Israel-Saudi Arabia relations normalization plan as a diplomatic achievement. Therefore, if he achieves results with this announcement, it will be a success. That's why I'm anticipating it. So, what exactly was announced? The article may have similar content, but a major trend is expected to emerge, raising expectations. So, by the way, what was the good news that was being talked about in the community? The contract with Nvidia was a highly positive development for the whole American tech industry. Now, as you can see here, there was also news that AMD is participating in Saudi Arabia's data center project. And also, Saudi Arabia announced that it will invest $1 trillion in the United States energy and tech industries. This was also a huge piece of news. I'm sharing this article because the Middle East is becoming a major content hub, which is why I wanted you to see this news. Nvidia, AMD, Global Foundries, and Amazon are all developing artificial intelligence chips. You can get information from Cisco and Google as well. This way, you can deliver very objective news. Now, that's the end of this article. Since this is comprehensive news about various industries, I think it would be good for many of you to read the full text through the original artificial intelligence voice narration. First, I will read only the Korean part directly for you. Until now, artificial intelligence infrastructure investors have mostly focused on data centers for high-performance cloud scalers in the United States and China, which are the areas we are most familiar with. Now let's look at the actual balance analysis. This is the outlook for 2024. Last year, when we looked at it, Nvidia, Amazon, Microsoft, and Google, these four companies accounted for a whopping 42% of artificial intelligence chip purchases. These four companies are taking up most of the demand. Even so, Nvidia's sales grew by more than 114% compared to the previous year in 2024. But even relying on just four companies, they were able to record tremendous growth. But this time, what's clear from the supply expansion deals with Saudi Arabia and the United Arab Emirates is the influence of artificial intelligence is now expanding rapidly from the Middle East to the entire world. At first, it was just the United States and China, but now it's expanding to the Middle East, and eventually, the influence of artificial intelligence will accelerate globally. This is what we can expect. That's why we have such expectations for this era. I believe companies at the heart of the artificial intelligence ecosystem, such as Nvidia, AMD, and Taiwan Semiconductor Manufacturing Company, will persist in bolstering their investment strategies. These companies are leading the way. They are focusing on producing high-performance GPUs, building artificial intelligence acceleration infrastructure, and dominating the foundry market, especially companies like Taiwan Semiconductor Manufacturing Company, which are leading in this area. In the case of Nvidia, they hold about 80% to 90% of the artificial intelligence chip market. Taiwan Semiconductor Manufacturing Company is also exclusively manufacturing chips for AMD and Nvidia. So, if Global Foundries becomes competitive, it could be in a position to expect continuous sales growth. That's how you should look at it. And also, many countries around the world are making aggressive infrastructure investments to strengthen their own artificial intelligence capabilities. Therefore, the memory semiconductor industry has a high potential for rapid recovery. The better the house you desire, the greater the competition, as evident here. That's simply the reality. Korea has a high potential for additional price increases, and the potential for these industries to continue to rise is also high. This is my personal judgment. Let me say it again, but the announcement was not enough, and it was lacking from the very beginning. The United States stock market's leadership in the artificial intelligence revolution presents a significant opportunity that investors should not overlook. In addition, I am making my judgment in this way. So, to make it easier to understand, I had artificial intelligence, which has memorized the entire article, read the original text of this article, and summarized it for you. Thank you to everyone who stayed with us until the end of today's broadcast. We will continue our joint fight until the day we can all retire as stock investors in the United States. Have a happy day. Thank you. The Trump administration's actions are enabling Russia and China to pursue artificial intelligence dominance that the United States cannot match. Several major American tech companies are thankful for this. They intend to invest billions in the region. As expected, following the agreement with the United States to be made public soon, Saudi Arabia and the United Arab Emirates are expected to expand their direct access to Nvidia and AMD's high-end artificial intelligence chips as a foundation for operating artificial intelligence models. President Donald Trump is expected to visit the Middle East soon to strengthen business cooperation as he brings American technology initiatives to the forefront. However, American companies have not officially announced any plans to expand their projects in the region. Nvidia, the top semiconductor maker globally, will provide the Human, a Saudi Arabian artificial intelligence infrastructure organization, with tens of thousands of its most advanced artificial intelligence chips over the next 5 years. Initially, the supply will include at least 10,000 to 80,000 units of the GB300 Grace Blackwell processor and InfiniBand networking technology. AMD, Nvidia's closest competitor, has also announced that it will supply a total of $10 billion worth of chips and software for data centers stretching from Saudi Arabia to the United States in partnership with Human. The United States tech venture company Global Artificial Intelligence has also announced that it is planning to cooperate with Human and several other partners. Global Artificial Intelligence, a tech venture company founded by industry veterans, plans to use the chip developed by Nvidia to launch a New York data center and is expected to expand to several other centers. Amazon.com and Human are planning to invest more than $5 billion in Saudi Arabia to build an artificial intelligence zone. Human plans to use Amazon Web Services and other server cloud technologies to develop the Saudi government's artificial intelligence agent market. Amazon Web Services has already announced plans to invest $5.3 billion next year to establish a data center cluster in Saudi Arabia. The world's largest networking equipment supplier, Cisco Systems, is also collaborating with Human to build an infrastructure that combines private global networks and Saudi-specific artificial intelligence solutions. In addition, the Abu Dhabi Artificial Intelligence Industry Support Partnership has also been expanded to 12 companies. Saudi venture capital company STV has launched a $1 billion fund to support local artificial intelligence startups. This investment will target early-stage startups in the Middle East and North Africa, aiming to support infrastructure development in the region. Google has provided an undisclosed amount of funding. The Trimfer administration has also signed an agreement with the United Arab Emirates, to attract 50,000 new startups every year until 2027. This is also seen as a move by the Biden administration to strengthen artificial intelligence export controls as the United States is trying to prevent high-performance hardware from being exported to China. If finalized, the agreement allocates 1/5 of chips to G42, with the remainder going to United States companies operating data centers in the Gulf region. Experts say that this is to prevent the inflow of advanced artificial intelligence and related technologies into the Middle East, and that the United States is reviewing the establishment of a new data center in the United Arab Emirates. This deal has not been finalized yet, but it is likely to be announced during President Tim Cook's visit to the United Arab Emirates on Thursday. Even Sam Altman, the chief executive officer of OpenAI, is visiting the Middle East as part of a tour of technology leaders. On the first day of President Tim Cook's visit to the Middle East, the announcement of the investment agreement drew attention as an unusual artificial intelligence initiative was also mentioned. In Riyadh, Saudi Arabia, President Trump emphasized the importance of strengthening business ties together with King Salman bin Abdulaziz. In addition, agreements were signed to purchase additional fighter jets and for Saudi Arabia to cooperate in using American Musk's Starlink service for aviation and maritime sectors. Mohammed of the United States. Until now, artificial intelligence infrastructure investment has mainly been concentrated in the data centers of high-profile American and Chinese cloud service providers. According to Barron's analysis, as of 2024, 4 companies, Amazon, Microsoft, Google, and Meta, account for 42% of global artificial intelligence infrastructure spending. In addition, Nvidia's sales grew by more than 114% year-on-year in 2024. However, as confirmed by the recent supply expansion agreement between Saudi Aramco and Miratech, the influence of artificial intelligence is now rapidly expanding from the West to the Middle East and around the world. This era-defining trend is further strengthening investment interest in artificial intelligence ecosystem companies, such as Nvidia, AMD, and Taiwan Semiconductor Manufacturing Company. These companies are focusing on high-performance GPUs, building artificial intelligence infrastructure, and dominating the foundry sector, so they are expected to continue to see steady sales growth even during a global economic slowdown. Also, as many countries around the world are making aggressive investments in infrastructure to strengthen their own artificial intelligence capabilities, the minimum level of demand is expected to grow even further. As a result, the potential for price increases and technological innovation is also very high. Let me say it again, but the fact that the United States is leading the way in artificial intelligence innovation from the very beginning, and that you can invest in United States stocks that are at the forefront of this artificial intelligence innovation, is a great opportunity that should not be overlooked by investors.